I want to thank all of you for taking the time to join us today. We're working hard at the Chamber to make sure that we're bringing you relevant content and information to help you navigate through this challenging time. I think that every day we're learning new things, and you're learning new things, and sometimes that's overwhelming. So how we navigate that together is how we'll get through it at the end. If you are looking for the information that we are putting out right now, make sure to follow us on Facebook. There's posts happening daily, sometimes twice a day, of activities or events that we're doing, as well as through our e-news each week. So make sure that you're reading through that in its entirety. Again, remain muted through the presentation, and if you have questions, as it was stated in the email, make sure to use the chat feature. They'll try to get through all the questions, but if there's a lot and time runs out, they may not get through them all. We'll just do our best. So use that chat feature as the questions come to you, and we'll do our best. And now I'll introduce the attorneys from Dunlap and Seeger that are with us today to go over the small business relief opportunities available under the CARES Act.
Thank you, Christy. This is Hillary Stonelake-Curtis from Dunlap and Seeger in Rochester. And Dave, John, and I are happy to be here this morning to talk with you guys about some of the loans available to small businesses and to answer your questions as best we can about some of these programs. We know that information is changing frequently on these programs, and in some cases daily, but the information we're presenting is current as of today. Can you go to the next slide, please? There are a handful of loan programs out there, some of which are included in here. For example, the Small Business Emergency Loan Program. This is operated through the Minnesota Department of Employment and Economic Development, or DEED, and you can find more information about that on DEED's website. Generally speaking, these are emergency loans for anywhere between $2,500 to $35,000, 5-year term, 6-month deferral, and possible forgiveness. So like I said, go to DEED for more information about that program. The same thing with the Small Business Loan Guarantee Program through DEED. This is really to help lenders provide capital to small businesses and provides an 80% guarantee up to a maximum amount of $200,000. The Main Street Lending Program. This was just announced by the Federal Reserve on Thursday, April 9th. It is still in development, so to speak, because there is an open comment period that doesn't close until tomorrow. So this hasn't come online yet. We don't have a lot of information on it, and certainly we don't have final guidance, but we'll provide just a high-level overview of what that looks like. Then we'll talk a little bit about the Economic Injury Disaster Loan Program, or EIDL. This is an expansion of an existing SBA program under the new CARES Act, and we'll talk a little bit about that. We're also going to talk about the Paycheck Protection Program, which is was issued as part of the CARES Act as well. We're going to spend some time on PPP because it's where we're getting a lot of our questions, and there's a lot of information out there. So we're going to spend some time focusing on PPP. Next slide, please. So as I mentioned, this Main Street program was just announced. So we're continuing to get information about it. But as a high level here, we can give you some information regarding eligibility requirements, applications, that kind of stuff. And if you go on the Federal Reserve website, you can find more detailed information than what we have on this slide. But generally speaking, this is for U.S. businesses. So businesses that are created or organized in the U.S. that have significant operations here. The majority of employees are located here. So really it is for U.S. businesses. And it's tailored to those who have fewer than 10,000 employees or 2019 revenue of less than $2.5 billion. We know they're looking at a minimum loan amount of $1 million, which may exclude a lot of people who might have been looking at doing a Main Street loan in addition to, example, an EIDL or a PPP loan, but that is the minimum loan amount that's out there now. The maximum loan amount, it varies a little bit. It's going to be equal to the lesser of $25 million or 4 times your earnings before interest, taxes, depreciation, and amortization, backing out outstanding and committed debt. There is a 4-year term with an adjustable rate that's going to be anywhere between 2.5% to 4%. They're looking at principal and interest payment deferral of a year, no prepayment penalties. And these are unsecured loans with no forgiveness. So in that respect, it's more like your traditional loan. It's administered directly through your local lenders or eligible lenders through the federal program. And there will be, it sounds like, origination fees that'll apply to this. So again, it's going to look more like your traditional loan. Next slide, please. Economic injury disaster loans, or EIDLs. We've heard a lot about this because when the CARES Act was enacted and this came online, this was really popular and continues to be popular, in part because of this 10,000 grant or advance that I'll talk about here in a second. But these, generally speaking, are administered by the SBA. So you're not going to go to your local lender for one of these loans. You're going to apply at the SBA website. We've heard from a lot of people who have applied for an EIDL, but who have not yet received the advance or EIDL funds yet. And this 10,000 grant or advance was really popular because it looked like applicants could apply for an EIDL and receive initially within 3 days, they said, a $10,000 advance, which didn't have to be repaid. So that was really attractive and a driving force for a lot of people to apply for an EIDL. But then the SBA changed the language to say, well, that'll be coming within days of your application. And again, like I said, we have yet to hear from anybody who's actually received this money. And now we're hearing that they're limiting the amount of this grant to $1,000 per employee. So if you have 5 employees, then you're only going to receive 5,000, not the full 10. Generally speaking, this is intended to cover 6 months of your operational expenses. The funds can't be used for the same purposes your PPP loan funds, and we'll talk a lot about what those funds will cover, but this is for a different purpose. As I mentioned, it's going to be administered directly by the SBA. It's for employers with fewer than 500 employees, but it also includes sole props, independent contractors, gig economy workers, nonprofits. And I understand that the application, so to speak, went live for your sole props and your independent contractors on Friday the 10th. So that should be up and running now too. Next slide, please. A few of the terms related to one of these loans: there are no upfront fees, so there's no fee to apply. There's no prepayment penalties charged by the SBA. And originally, the max amount of the loan was going to be $2 million. But now we're hearing that they're maxing loans at between $15,000 to $25,000 again. So I think it's due in part to the massive amount of applications the SBA received, in addition to the amount of money earmarked for the program. But that's the current information we're hearing today. No collateral will be required for loans of less than 25, no personal guarantees on loans under 200, and the interest rate will be 3.75 for small businesses and 2.75 for nonprofits. The term can be up to 30 years, and that will depend on the applicant's, credit history, your ability to repay, which is also how they determine what the amount of the loan will be. And the last we're hearing is that you can apply for the loan with their new streamlined loan application, and then a credit officer, a loan officer, will reach out to you and get more information regarding what your specific needs are. So that's the information we're hearing on EIDLs currently, and an overview of that. If anybody has received any advance or EIDL funds, we'd love to hear from you about what that process was like. And that's just some general information on that. Next slide, please. With that, we'll turn it over to Dave to talk a little bit about PPP basics and then get into the meat of it. Dave?
Thanks, Hillary. Good morning, everybody. Thanks for taking the time. My name is Dave Peterson, and I previously described myself as a business lawyer, but I think I might be more accurately described these days as a PPP lawyer. It's almost complete inundation these days with the PPP loan program and what that means. I'm going to just spend 2 slides here, just kind of hitting some high level before I pass it over to John to get a little deeper in the details of the program. I suspect most of you probably have kind of seen the basics, so I'm just going to try to run through this real quick. But just in case you haven't, there's a lot of information out there. Feel free to email us. We've got blogs and things about it. We're happy to help educate if you haven't even looked at it. But I suspect not only many of you have seen it, but many of you may already have your funds. So here's just, again, some real basics. Who's it available for? Businesses that have 500 or fewer employees, certain nonprofits, veteran organizations, tribal concerns, sole proprietors, self-employed individuals, and independent contractors. We're going to hit on that towards the end because there was just new guidance that came out yesterday on that. How's this administered? Unlike EIDL, it is working through your lender, and I emphasize the word your lender because that's typically the best place to start. What's the loan amount? Well, in a nutshell, the loan amount you're going to get is 2.5 times your average monthly payroll cost for 2019, subject to some caps for higher earners, a $100,000 cap. Next slide, please. So a lot of our clients have gotten the money, and now we're getting back into, okay, great, I have the money. Now what do I do with it? So a good refresher, even if you had read this earlier or seen it earlier, here's what it can be used for. You can use it for payroll costs. That includes benefits. You can use it for interest on mortgages if they were incurred before February 15th. Same with rent under leases and utilities that were in service. Specific to rent, lots of questions about, does that just real estate rent, or does that also include, say, rent on vehicles and whatnot? I think the guidance and prevailing thought is if it is a personal property equipment lease, yes, if it was in place before then. And with utilities, that includes phone and internet. Unclear whether that includes cell phone. But the important thing here is when you're seeing in place on February 15th is we are emphasizing that the way we're reading it is that these, you can't sign up new service, go from, slow internet to fiber and suddenly use that. I think that would be dangerous. And you can't, start paying more rent, particularly if you're on both sides of the ledger there as landlord and tenant. So just kind of use some common sense there. It's intended to be ordinary expenses that you would otherwise have incurred during this time period. The next point I make that there's a potentially all of the loan can be forgiven, and John will get into that in just a little bit, but basically there's a number of factors, and you're going to have to submit a separate application after you've spent the money to determine how was the money spent during the 8-week period when you got the loan, and we'll talk a little more about that. How many FTEs were retained or restored, and what payroll reductions did you have during these relevant time period for those that are making under 100,000. That will determine how much is forgiven. There's a calculation, and it actually can get fairly complex. But then lastly, so whatever's left over, there's a remaining balance that accrues interest at 1% from the date you get the loan, by the way, for the 18 months starting 6 months after you took the loan. There's a little confusion right now on whether or not the amortization is fully amortizing over that 18 months of whatever's left, or do you take the original loan amount and amortize that and have to pay that? I won't get too deep in that, but stay tuned on that. So I think with that, I'll flip to the next slide. I see we have some questions starting to come in, but these might be answered in later slides. So let's hang on for that. John.
Thanks, Dave. Glad to have a chance to discuss with those on the Zoom what we're seeing and hearing about opportunities for small business relief. Dave, Hillary, and I have at least remarked to ourselves, and I can't imagine for all of you, all the content, everything that's constantly coming out and how to keep up with it day in, day out. My name is John Beatty, and I too probably describe myself as a PPP lawyer, as Dave mentioned, considering what the last 10 days have been consumed by, to the point of the frenzy of information coming out. PPP was announced, and everyone could, as I suspect many of you on the call are midstream on these applications, as Dave said, or perhaps have received your funding already. The actual CARES Act says that PPP is to be around for application from April 3rd through June 30th, 2020, or until this $349 billion runs out. And there's all kinds of conversation on the interweb about when and predictions over unders on when that's going to happen. The photo on the screen, I've lived through a few of these on the river myself, and suspect many of you have. That is a sunlit morning on Lake Erie. Those are not birds, but those are mayflies hatching. And probably for yourselves, this is going to represent a very short burst of time where everyone across the country is working to get a PPP app in if they're eligible and if it fits their circumstances. We know for certain in talking to the lenders that we work with and all the businesses that this has been something that's been a bit of a race and just one of the many things that people are working through. So it to me reminded me of a mayfly hatch in the sense of there's still mess on the back end that we aren't quite clear on relative to guidance from Treasury and SBA on the forgiveness piece. But what we do know and what's driving the demand is this first come, first served basis on which these $349 billion are made available. Our general recommendation and the takeaway I'll say on this point is to the extent that you haven't started or that you're in the midst of this transaction, it's likely that the lenders are going to deal with their existing customers before they turn to new customers, and that's the place that you ought to have turned or be turning to the extent that you're worried about getting in line and working your way through with the application. We can go to the next slide, please. Got a couple slides here, and this is data that's as current as Monday night, to the point about the over-under on when the $349 billion may run out. There's at the end of last week, I'll say, there was good traction in adding to that $350 billion as Congress was anticipating piling on another $250 billion. To put some of these numbers in context, you'll see on this slide that as of Monday, April 13th, more than 1,035,000 loans had worked their way through, almost $250 billion worth, or some 60% or better of what is out there. And the numbers I'm reading say that there are 30 million small businesses that would fit the description or definition under the CARES Act, 30 million small businesses across the country, excluding even the sole proprietors and the independent contractors also eligible. So we're really scratching the surface on these things. Interesting to Minnesota and Wisconsin as of Monday is that about 15 billion of the 247 billion that have been at least accounted for. And I think I'm understanding these to be loans that have closed and worked their way through E-Tran, but perhaps they've got a different definition here. In any case, you see that there's 64,000, 65,000 5,000 loans between Minnesota and Wisconsin alone, and almost 15 billion as of Monday that's coming to small businesses in Minnesota and Wisconsin. Next slide, please. Here's more from that same SBA report, and perhaps you find it interesting or useful as you consider your own place in this program or perhaps in accessing the program. Not surprisingly, construction, manufacturing, and professional, scientific, and technical services comprising a huge percentage, or 36, 37% of all applicants. We'll get into it here a bit more, but something that I think will be curious after the fact when it's all said and done and there's a post-mortem on PPP is why perhaps retail trade and accommodation and food services, I'm anticipating hospitality is in that, lumped in there too. You know, anecdotally, the conversations we're having is that folks in retail, accommodation, and food services, I should point out, these are only the top 10. Outside of the top 10 in the industry sectors included amusement, education, finance services. You know, if we throw amusement in with retail and accommodation and food services, I think there's a large portion of those businesses, probably many on the call, who were shut down early by executive orders and have already had some fairly extensive furloughing of employees and are caught sort of in the in-between. So curious if that percentage is depressed here for those folks who have gone out and actually pursued a loan despite not having work or workforce. And we can talk more about the nuances of that. The loan size, I think, is reflective of the fact that this program, perhaps more so than EIDL or Main Street that Hillary talked about earlier, is definitely catching what I think would fit the small business description, and 70% or better of the loans that have moved through already are in that 150,000 or less. But the data is also interesting to see how the balance of these loans are, where they're being spread across the rest of that strata there. Next slide, please. I think where we found ourselves treading a line early with respect to PPP was this sense that it was great for everybody. I've maybe already editorialized that a bit by suggesting that there's questions out there for hospitality, retail, and the bar and restaurant world. But at least with respect to PPP forgiveness, you know, we aren't suggesting that this is the best thing for everyone. There, as is clear, and we'll talk about the next couple slides, some or all of the PPP loan may be forgiven depending on how the proceeds are used during an 8-week period. And ultimately, the real question someone has to ask themselves before they go out there is to say, am I prepared to be taking on new debt for my business at this time, which may in the end not be forgiven. So our recommendation to everyone that's, and I think this fits if you're midstream or not, is have a designated account for any PPP loan funds that you and your business receive, and have a real clear, careful, disciplined forgiveness plan as to how you're going to account for those individual loan dollars that you receive, such that it fits into the structure that Treasury is providing here. 75% of your forgiveness will depend on 75% of all qualified expenses, meaning payroll costs incurred during the 8-week covered period after which you receive the loan. Loan forgiveness is going to be impacted by a reduction in any salary or wages or reduction in FTEs as compared to that period of time on which you based your loan application. So looking back at the calendar year for 2019, the 12-month trailing period, or if you're a relatively new business, you are also permitted to use January and February of 2020. You'll see the exemption noted on this slide provides, however, for those businesses that might be reducing employees during the period of time from February 15th through April 26th to have exempt reductions in wages and FTE if they bring all employees or salaries back to previous levels by June 30, 2020. We can skip to the next slide, please. Here you'll see, and it was covered in an earlier slide of Dave's as well, there's more guidance forthcoming. We anticipate it'll be another week or two as SBA fills us in on exactly how they intend to have the details relative to forgiveness. Right now, we just know the broad categories and some definitions. The covered period is the 8-week period after which a borrower receives the loan. The payroll costs, you can refer to Dave's slide, but those are the costs related to payroll as defined in the CARES Act that are paid during that qualified covered period. We have interest on covered mortgages. We have payments on rent obligations, which, as we've read through the statute, we understand these to include personal property obligations as well, if you have a lease on vehicles or other equipment, and similarly covered utility payments. I'll open it up to Dave too, if there's more to add relative to this forgiveness piece here that we ought to run down.
Yeah, you know, John, I know you and I have had numerous conversations over the last few days or week on these categories. I think one of the things that we are advising clients again is on these the rent and the utility stuff is the key language in the statute says that it has to be incurred and paid within the 8 weeks. So if you had been deferring your rent before you got your money, I think the safe answer is to say that rent that was incurred prior to the 8 weeks is not an eligible expense within this 8 week window. Do you agree with that? I guess I'll throw that to you.
Yeah, no, I know that conversation's happened a handful of times, and where we've been caught without a lot of guidance is where a creditor or a landlord is suggested to the tenant, hey, I know because COVID or because coronavirus, don't pay me in March and pay me when you can. And now you've got this PPP money. Does that mean it was incurred and paid during this same period of time? And as you bring that up, the other thing to emphasize is that those non-payroll qualified expenses cannot exceed 25% of the entire forgivable amount. So for those employers and businesses that are on track, as same as it ever was, you're likely to hit the 75% threshold with respect to the required qualified payroll cost during the 8 week period, and on track to get to that 100% forgiveness threshold. But for those that are caught in between and not, maybe having the same workforce in place now or planning over the next 6 weeks, there's more of a balancing act to try to figure out how to optimize the 25%, because there's a lot of allure in that 25% for mortgage interest or rent, but if the payroll costs aren't there to support 75% of all loan proceeds, there's going to be a diminished forgiveness amount. We're certain of that, not necessarily all the details.
Right. I see we got a question that came in that said, so state taxes, health costs, and retirement costs are eligible payroll costs? And the answer to that is clearly yes. The payroll costs, as you calculated your loan amount, is the same definition for the eligible payroll costs within the 8 week window. So I think that goes to that. Next slide, please. So John was kind of alluding to this here. This first, what we're calling current key PPP issues, and these two are the biggest ones we're dealing with. So, as I say, on the one hand, as John was talking about, this is a first come, first served deal. Is this money even going to be there? I mean, so there was a race by many to go get the loan. It's anybody's guess whether they're going to add the 250 billion additional and when that happens. But on the other hand, it creates this problem for many businesses that they don't want to start their 8 week period. So last week, Treasury issued some guidance that created, it kind of created more problem there along those lines. Because basically it said that banks have, or lenders, I shouldn't say lenders, it's not just banks, but lenders have to make their initial loan disbursement within 10 business days of receiving the approval. And so, and then it said your 8 week period starts the day you get the money. So the problem really isn't the 10-day requirement as much as it's the beginning of the 8 week period for many businesses. And so, it's a major issue for borrowers whose businesses are forced to be closed because of, either the governor's order or efforts to contain, the COVID-19. There's this real, what we're calling timing issue, because as they kind of project ahead and say, okay, I got this check, great. How much is going to be forgiven versus how much am I going to have to repay? right now, the program works great for businesses that are currently operating and are fully staffed. They can get the money right now, continue to pay their bills as they normally do, and they're likely going to get full, if not near full, forgiveness. However, if you are a bar or a restaurant and you're closed, now your decision point is, do I need to rehire people that are sitting at home to do nothing, get them back on our payroll, when in many instances they're on unemployment, and does that make sense? Or do I just wait till June 30th to rehire them? Very unclear. I know that there are organizations that are focused on this at the national level. This issue has been amplified through numerous different trade associations. One recent proposal that I was reading says, look, it's a pretty easy fix. What you do is you make the 8-week period occur after the businesses reopen, not when they get the money. So that at that point when they open, then it's natural to rehire the employees and start serving their customers. Or another one is just perhaps just start it on June 30th and rehire everybody. But jury's still out on that one. But that is the biggest issue. And then kind of compounding that is the second issue here, which is that a lot of our clients are calling us saying, well, our workforce has done the math and they're going to make more money now with the federal enhanced uninsurance benefits than they would under normal payroll. So, that's a tough one as well. I would hope that, a lot of the workforce would understand that that's going to be a short-lived reality, and you're better off having a job on the back end of this. But again, that's key issues there. We'll see what plays out. Next slide, please. So there are lots of questions we're getting. We tried to pick 3 here that might be the true frequently asked questions. The first one is, do I include payments made to independent contractors or sole proprietors when I calculate my loan amount? The answer to that is clearly no, you do not. And in fact, the guidance we got yesterday, which I'll hit on here in a minute, makes it clear that the independent contractors, sole proprietors are, they're provided for on their own. They'll have separate applications. Next question is, how do I determine my FTE count? And I think we had this question even in the chat room. And unfortunately, the answer is it's unclear right now, given the guidance that we have. The guidance that has been issued keeps talking about more guidance coming on forgiveness. In the chat room, I know I posted 2 different links, and Hillary had responded to this question in particular. Those links are, one is just to the general website for the PPP program and just monitoring. They will post all the regulations in there. The other one is specifically the frequently asked questions, which seem to be added to about every other day. So stay tuned to that, and we hope to get more guidance on these issues very soon. The last question here is really specific to that business that I was describing that has that timing issue, So if I'm closed, number one, can I apply for PPP? Yes, you can. When should I apply? Hard to say. I mean, if you think that you can play some arbitrage and assume that Congress is going to add $250 billion and not fix the timing issue, then you might want to wait. I have some clients that are doing that. But that's an educated guess, I would say right now. How can I optimize the loan forgiveness, with this situation in front of me? And the answer to that is there's clearly no one-size-fits-all model. This is a multifaceted, complicated analysis. Many accountants we see are developing models and spreadsheets to go through the various hypotheticals that you have to go through to deal with all these variables. When did you get the loan? What are your current FTEs? And when do you reasonably anticipate reopening? And what revenue do you project? Those kind of issues, which is to say, this time more than ever, I think working with your financial advisors, your accountants, to help you navigate those is critical, absolutely critical. Next slide, please. So I had alluded to this, talked about it briefly yesterday. We just got guidance on a new rule clarifying how independent contractors and other self-employed taxpayers can take advantage of the PPP. So self-employed individuals are eligible if they, and here's the 4 criteria, if they were in operation on February 15th, if they have self-employment income, so i.e. they're an independent contractor, a sole proprietor, the primary residence is U.S., and have or will file a 2019 1040 that includes Schedule C. So the regulation itself, which by the way is you can find through the link that we post that I posted on the chat board, that includes several examples of different scenarios. If you're self-employed with employees or if you're self-employed without employees. I'm not going to go through those, but to say not a bad idea to look at that and kind of see how they have it calculated. Also, the SBA issued separate guidance that says that self-employed individuals who are not in operation in 2019, but were in operation on February 15th, so this would be a new business, and will file a 2020 form 1040 with a Schedule C are eligible. Just a couple other things to note. If you haven't filed your 2019 tax return, which was due today previously, which now has been extended, you must still, when you apply for this loan, provide a Schedule C, showing what your 2019 Schedule C self-employed income is, and 1099 miscellaneous with that. And there's some other supporting documentation, invoices and bank statements and books and records that establish that you were actually up and running on those days. So what can you use the proceeds for? Well, basically it's the same purposes as other businesses as we've gone through. But now they're saying that the payroll costs include something called owner compensation replacement. And that is based on a calculation from your 2019 Schedule C. But it's important to note that is still subject to that 75% rule. And the way we are interpreting, and also what I'm reading all the prevailing interpretations right now, is that home office rent, interest, and utilities, so if you work out of your home, are not included as eligible PPP expenditures. So they kind of go to great length to talk about, well, program is limited, and they think that could be a windfall. I guess you can draw your own conclusion. We did get a question, and I'm gonna drop it in here. It says, for a sole proprietor, if the current payroll costs for the calculation of loan precedent but forgiveness, do they need to have earnings and self-employment in the 8-week period? And the answer to that is no, they do not have to have earnings. So if you are basically out of work right now, which many are, you don't have to have income. It's based upon your 2019 income. And so that's the answer to that. Or, can they spend the full proceeds on utilities, rent, and still have forgiveness? There is that home office exception that you have to keep in mind. And so, for example, the way we're reading the rule, it says if a person, made over 100,000 net on their Schedule C, and they don't have employees, the loan amount is going to be $20,833. The forgiveness of that is going to be 8/52, so 8 divided by 52 of the loan amount. So they would get $15,385 that they could pay themselves as owner compensation replacement, more or less the equivalent of payroll or costs, and that would get forgiven. However, the balance, roughly $5,000, it may end up being a loan, and that's the way we're reading it right now. I note here, it's interestingly, the Treasury made it clear that you are not, self-employed health insurance premiums and, their share of retirement benefits are not included. So unlike, a corporation or another business applying. And again, as I said, the rule seems to go at great length to make it clear that the money is limited, and they basically view the ability including those expenses is creating a potential windfall situation. And then the last point here is the rule clarifies, and we've gotten a ton of questions on this, that partners, so this is partnerships, who earn, partners from partnerships who earn self-employment income cannot submit a separate application for themselves. The partnership itself has to. And this is the rule, I will say, created probably as much confusion as it resolved relative to partnerships, particularly partnerships that have no employees who previously didn't apply. But the place to start right now is take a look at your partnership return. If you have a partnership, it's your form 1065. And I said, I put in here line 14, I should say line 14 of page 4 on that form will list your self-employment income. And there's the same $100,000 limitations and whatnot. We had gotten one other separate question I would address here. It says, I do not have employees and pay myself through owner draws. Will this make a difference in what I'm eligible to apply for? So the answer is really going to depend on your tax status. On one hand, if you are a single shareholder S Corp, the S Corp has to be the applicant, and you cannot use any dividends or what you might be calling draws as part of your loan application. Only the W-2 wages you report. If you're a sole proprietor, then yes, you can be the applicant and you go through this criteria here. So I tried to give you a nutshell here. I know I bounced around a little bit on that, but there, as I said, there's a lot in there, and you really got to kind of dig into it in detail to see what's applicable to you. I see a bunch of stuff coming in the chat room. I think I am done with my portion, and if we can go to the next slide, that's kind of the prompt for Q&A here. So Christy or John or Hillary, what do we have?
I see we have a couple of, or at least one UI related question. Let me kind of go back up from Joe on the UI note. Wouldn't the person be ineligible for UI if they're refusing to come to work? Generally speaking, if you have an employee, I think, who is refusing to come to work because they're making more on UI right now, that I think will affect their eligibility for UI, but that will be, decided by the state. Generally speaking, you have an obligation under UI to actively look for employment each week, but under the COVID crisis, that's more or less been lifted. It doesn't include jobs that put health and safety at risk. So, if you're sick or isolated, you don't have to apply for a job that would compromise your health. So in that respect, that might be a factor. But otherwise, I would say, yeah, if you're just gaming the system, so to speak, or if it appears to be that, then your eligibility might be affected.
I know we've been trying to keep up with the questions. I think that was one that was, I'm glad you addressed that one, Hillary. We welcome any others. And on this slide, you'll see our emails to the extent that something occurs to you after the webinar here. A couple other things just to point out as we're looking at small business relief and all-encompassing options. I note that Winona County, its commissioners, I think last night or day before, approved extension of property tax payments. Christy can maybe offer more there, but for those of you in Winona County and balancing that obligation, looks like there's some relief on the way. Something we've kept our eye on, may or may not apply to others of you who have some real estate investment obligations or opportunities. The IRS has also announced end of last week extension on what are 1031 deferred tax exchange transactions. They've announced an extension through July 15th, 2020 for anyone that had a 45-day or 180-day closing obligation or identification obligation during this period. So there's some relief for 1031s, property tax relief. We're hoping to see more broadly through the state for other counties, but good news, at least in Winona County, it seems on the way there. And we're doing our best to stay on top of other programs. Sounds like, you know, we've been referring to PPP, the CARES Act, and the Families First Act before that as various innings or packages, and sounds as though there's maybe a fourth one on the way that could include this additional money for PPP, among other things. We're doing our best to keep up on the blogs and on various posts and webinars, and we'll be posting those in places. Hopefully you can find them if you have questions as these things unfold.
We did get one other question. It says, if I have employees that their wages vary, do I need to pay them what they averaged from last year, even if we don't have the work? Well, there's really, as I see it, two questions in there. One is the question relative to maximizing your forgiveness amount. It allows you to reduce their pay. Well, let me back up. The window that we look at to see whether or not you get forgiveness reduction for pay reduction reasons is February 15th through April 26th. Okay, so if you reduced anybody's pay in that window, then you might end up with reduced forgiveness on the back end of this, if you do not restore them back to that pay by June 30. So there's an exception to the rule, if you follow me. So it is not looking at their 19 wages, it's looking at that most recent thing. The second question I think that is in here is really relating to that major issue, which, well, if I have no work for these people, you know, well, does that even make sense? And that's a deeper dive. Because you may end up picking up some payroll tax by doing that, and they also may be better off on UI. And if we get more clarity on that 8-week window, that sliding 8-week window, I think that will help answer your question.
Thank you guys so much. Does anybody else have any questions? If you do, shoot them in the chat. I wanted to add to your comment about Winona County and property tax. They did pass a property tax extension for businesses only that doesn't touch residential property taxes, but for business property taxes, there's a 60-day extension. So those will come due July 15th. I do believe that they will reevaluate it as if this progresses further and make determinations at that point. And they do ask if you can pay, that you should, but for those that are in financial hardships right now due to the COVID-19, that you are permitted to use that extension period. I have been fighting diligently to the legislature and our senator and representatives as well, and will be testifying in front of the tax committee tomorrow about statewide mandate for a property tax extension, because it's really hard for businesses that maybe do business in maybe here, for instance, Winona County, Olmsted County, other counties, and if they don't have those extensions everywhere, it really gets confusing, and we've kind of seen that play out. Just people are overwhelmed by all the information coming at them as it is. So it's great that Winona County has that relief, but we're hoping to extend that statewide. I don't see any other questions, so thank you so much, Dave, Hillary, and John, and we appreciate your information. Again, like they said, if you have questions, their emails are there. We will get this recording for you as well as the slide deck. And again, we appreciate it. Thanks, guys.
Thank you.